The Fed's action of raising interest rates indirectly favored cryptocurrencies. Is it okay to conclude that the US Central Bank now approves of cryptocurrencies? Federal Reserve Chairman Jerome Powell has recently said that he doesn't view cryptocurrencies as a financial stability concern. Well, Cardano is the only coin that is capable of triggering this level of approval. Do we share the same opinion? Watch this video till the end. Cardano's and Avalanche's tokens led to gains among major cryptocurrencies after the US Federal Reserve raised interest rates. This recovery followed a jump in the broader markets. In early April, the overall crypto market added a capitalization of 4.9%, almost reaching the level of $2 trillion. Bitcoin and Ethereum were up 5%, reaching pivotal resistance levels of 40,000 and 3,000 respectively. ADA spiked as much as 14% before declining to 86 cents. The driving factor for this token was the ban from retail traders, as on-chain data had disclosed a 186% rise in the number of wallets holding ADA for 30 days longer or more. This move affected other cryptocurrencies as Solana jumped 9% to just over $93, while AVAX jumped as much as 12%. Similar to Bitcoin's result, other currencies such as BNB and XRP increased just over 5%. The move came amid a broader market recovery in the US, which likely stood out as a bullish sign for investors. Raising the interest rate by 50 basis points, the biggest increase since 2000, Fed Chairman Jerome Powell stated that similar moves should be anticipated in a couple of months. He had addressed the growing concerns surrounding surging inflation and openly stated that the Fed will expeditiously bring it down. However, he stated that the move could inflict some pain on the economy as it takes steps to deal with inflation. The Fed's confidence in tackling a slow economy led to the moves up in the financial markets. Equity markets in the US jumped, with technology-heavy Nasdaq ending the day 3.19% higher and the S&P 500 gaining 2.99%. This is the biggest jump in a while, but there is also a good chance that this is only the first of a jumbo rate rise. But Fed Chair Jerome Powell has ruled out an even bigger hike of 75 basis points, which triggered the fear of most analysts. Some traders and developers claim that the Fed's economic decisions were outstanding, but the sentiment for longer-term recovery remained mixed. The Fed's obligation is to keep the economy as stable as possible, and raising or lowering interest rates is one of its tools. The idea is to slow spending and bring down inflation without initiating a recession. However, this approach is not favorable for crypto prices, and we can expect choppiness to continue in the short term. One of the reasons cryptos have struggled to gain momentum is that people are pulling away from high-risk assets in response to a hawkish Fed. This is one reason why it's essential to invest money you can afford to lose, especially for high-risk assets like cryptocurrencies. What matters is the long-term perspective one has for crypto. The leap in cryptocurrencies revealed that the crypto markets maintain a surprisingly strong level despite the macroeconomic pressures. This statement contradicted the fact that cryptocurrencies were volatile. With more interest rates increases on the horizon, the recovering economy might continue to bring more crypto rallies. This will affect the price predictions of Cardano, but how? ADA is set to increase this year, but is under the condition of economic recovery getting better than expected. There is a possibility of seeing a few more rallies, which will speed up the rate at which it reaches its expected price and beyond. In line with expectations, the Fed lifted rates by 25 basis points. While the Fed's interest rate projections turned out to be hawkish, Russia's invasion of Ukraine and supply chain issues could force the Fed to shallow its rate path projection for this year. The main issue with Cardano is not with the coin, but with the current state of the cryptocurrency market. Crypto prices may no longer be plummeting like they were in the previous months. But with rising interest rate pushing down the value of risk on assets, and as the federal government is taking the issue of regulating the financial market into serious consideration, a full rebound for Bitcoin and Ethereum could pose a challenge. Precisely, the challenge could be even greater. Cardano's price only peaked in September after its blockchain implemented the Alonzo upgrade, unlike Bitcoin and Ethereum, whose prices peaked in November. Since then, it has dropped tremendously by more than 70%. Few individuals in the market view this coin as a name that will give Ethereum a run for its money. Nonetheless, this should not impede your confidence about Cardano surviving its challenges and moving ahead to become a widely used alternative to fiat money. Once planned upgrades come on board, Cardano would help improve its network usage and overcome sentiments about its native coin, in turn enabling it to possibly return to its high water mark. it may seem like the best alternative to skip ADA. After all, despite all the positive news, there is a huge increase in the total volume locked, and the market remains skeptical about aspiring Ethereum killer, even amid the growth in developers' activity. But the same thing played out with another would-be Ethereum killer, Solana. In Solana's case, negative news like cyber attacks and network outages outweigh positive news like high network speed. Also, confidence in grabbing the decentralized finance crown from Ethereum has plummeted drastically. It may be quite too early to give up on Cardano. Why? The forthcoming Hydra upgrades, Vassal hard fork, and other planned out feats. You don't want to miss out, right? Once these projects are accomplished, it will result in the coin's blockchain gaining faster transaction speeds. That's not all. It will attract more developers, turning it into a more attractive platform for decentralized finance. Likewise, if this plays out, Cardano could see a big increase in its valuation. Currently, ADA has a market capitalization of less than 1/10 that of Ethereum. But this does not determine that the coin may re-hit its past all-time high and hit new highs in the years ahead. Concerning Fed's decision on raising interest rates, which indirectly favored cryptocurrencies, is it okay to conclude that the US central bank now approves of cryptocurrencies? Obviously, the Fed intends to curb and pump out the easy money policy. The hawkish view from the US central banks hammered the crypto cart, and the top coins saw a big drop in their pricing. But recently, Federal Reserve Jerome Powell has said that he doesn't view cryptocurrencies as a financial stability concern. Quote, "I don't see cryptocurrencies as a financial stability concern at the moment," end quote. However, in the US central bank chief's view, what they are is really speculative assets. After the Fed said it would accelerate the pace of its tapering of bond purchases and penciled in 3 hikes of its benchmark interest rate next year, Powell, speaking at a press conference, added, "I do not think crypto assets are risky, as they are not backed by anything, and I think there's a big consumer issue for consumers who may or may not understand what they're getting." Powell also highlighted the role of stablecoins, and he said he supported the views expressed in the President's Working Group report, which called on Congress to quickly pass new legislation that will require stablecoins to be issued by insured banks. Stablecoins can currently be a useful, efficient consumer-serving part of the financial system if they're properly regulated, Powell said. Cardano, through careful risk management analysis over time, has identified scalable solutions that can make the frontier financial markets more inclusive and sustainable to unlock lasting economic value. The careful development of blockchain network is proof that cannot pose threats to the financial system. Its past achievements and projects pioneered the fact that it strengthened the strings of financial stability. In a recent interview with Real Vision Finance, Hoskinson said that Cardano is a collection of protocols and technology that allows you to transform, store, and manage value, identity, and governance. Okay, so what does this mean? It is not strange that you can store assets on Cardano and build smart contracts to manage them. The proof contradicts the Fed's claim of the inability of cryptocurrencies to serve as a store of value. Shortly, the Fed will certainly become involved with cryptocurrencies, especially Cardano. This can be possible when Cardano hits an all-time high and has more achievements to boast of. It is certain that when Cardano gets full attention of the Fed, all other banks will follow. Indeed, the coin has a promising future. Would you like to share your thoughts too? Let us have it in the comment section below, and make sure you click on the subscribe and bell buttons.